we are going to look at financial innovation, electronic payments, and specifically the competition between electronic payment institutions. We have talked about innovation before, right? Innovation is something with commercial value, different from previous methods or works, and can be considered innovation. Finance actually helps us conduct transactions, and there are several ways to make payments in currency within transactions. When you see the word currency, you think of money or cash. Currency has three characteristics. The first is its function as a store of value. The second is as a medium of exchange. And the third is as a unit of account. What is meant by storing value? In the past, there was something called the gold standard, where the central government could only issue as much currency as the amount of gold you owned. That is, one day you might need to exchange this money for gold. So this is how the value of currency storage was viewed in the past. However, what does it actually rely on? It relies on scarcity, including cryptocurrency, which uses encryption technology. Those who can solve the encryption are called miners. If miners can solve the encryption, they will receive a certain reward. Cryptocurrency is also scarce in this way, with a limited supply, and this scarcity brings stability, which allows it to store value. What other function does currency have? Currency can be used as a medium of exchange, and since it is used as a medium of exchange, it must be convenient and have liquidity. What does convenience mean? It means that you can even use a pig or a dog for transactions. So this is a medium of exchange, but you still need to make it very convenient, because as transactions become more frequent and occur in various places, you need to make it very convenient. Okay, so what does liquidity mean? Liquidity means it must be allowed, or it is generally recognized that it can circulate within a certain area and everyone can use it interchangeably. It usually represents the sovereignty of a country. Therefore, each country has a currency controlled by its sovereignty, and anything else cannot be traded in that region. So like the current use of cryptocurrency, if you want to use it for payment or receipt, in fact, its liquidity is not that high. Another aspect is legality, because this currency also has a function as a unit of account. How much currency you have, or how many acres of land, or how many houses you own, can of course be a way to describe your wealth. The main function of currency as an accounting unit is to allow you to keep accounts, which represents how much wealth you actually have. This must have legality, meaning whether it is real or fake. These are the three main functions of currency: storing value, serving as a medium of exchange, and being an accounting unit. Then what is the purpose of currency? Currency is used for payment. So in a goods market, some provide goods and services and some need goods and services. After they exchange goods and services, payments must be made with currency. There are usually two forms of currency payment. One is cash payment and the other is non-cash payment. A common form of non-cash payment is a credit card. A credit card is actually a way for you to make a purchase now without having to pay immediately. You are essentially using your credit. That's why it's called a credit card. It allows you to delay payment for a certain period using your credit. As for the others, such as electronic tickets, debit cards, and transfer checks, when people use these payment tools, the more electronic the ticket, the smaller the amount you pay. You would use checks or transfers for payment, usually for larger amounts. A relatively new financial innovation now is that we have started using electronic methods for payment. Actually, credit cards and electronic tickets can also be considered electronic methods, but true electronic payments are operated by electronic payment institutions, which I will introduce later. There are some differences between electronic payments, mobile payments, and third-party payments. Electronic payment, broadly speaking, refers to using electronic or online methods for payment, which can all be called electronic payment. Mobile payment, of course, involves using mobile devices to make payments. The meaning of third-party payment in a narrow sense is that A and B are conducting a transaction, but A does not have enough confidence that B will send the goods, and B also does not have enough confidence that after sending the goods, A will transfer the money. So they don't know whether someone should ship first or pay first, so they both go through a third party. Let the payer pay the third party first. The third party will wait until the buyer has received the goods and confirmed it, then transfer the payment to the seller. Okay, so this is the original definition of third-party payment. Later, the scope of third-party payment expanded. As long as the transaction is not directly between the buyer and seller, any other method can be considered third-party payment. Electronic payment, mobile payment, and third-party payment actually have some overlap with each other. All financial services, including banking, insurance, and securities, are financial services. They must be conducted by registered financial institutions. If you are not a financial institution, theoretically, you cannot engage in these monetary transactions. So in the early days of these games, because you had to buy game currency from the start, right? For example, Soft World and Gamania issue game currency, allowing players to purchase it and then buy treasures or exchange treasures. This creates a medium of exchange between them. However, theoretically, this is not legal tender, so it cannot guarantee that when you receive or pay, there is truly a guarantee. More and more online and electronic forms are involved in transactions. So in the year 2015, the Financial Supervisory Commission established an electronic payment institution regulation, allowing the electronic payment institutions to apply to become electronic payment handling institutions. The electronic payment handling institutions, well, you will have some that are specialized electronic financial institutions or mixed electronic financial institutions. As of now, there are 19 banks, plus the post office, that are mixed electronic financial institutions. The specialized type refers to those under the categories of gaming and financial transactions, such as OPay, GammaPay, and EasePay. SPay was originally from Pay2Go. Then there is International Union, which is actually PC Home. These few are specialized electronic financial institutions. There is also third-party payment and electronic ticketing. The so-called electronic ticket is something that can store value. It was initially used in transportation services, so things like EasyCard, iPass, and also iCash. This kind of electronic ticket in English is called an electronic ticket, and it is a device that can store value. Later, they also applied to become qualified electronic payment institutions, including Jeku Payment, Line Pay Money, which was originally Line Pay plus iPass, then Line Pay. iPass changed its name to Line Pay Money, and iCash Pay, EasyCard Pay, all of which belong to the category of third-party payment and electronic ticket electronic payment institutions. Recently, PX Mart and Family Mart. They originally had their own e-wallets, like we have PX Pay. However, PX Mart's PX Pay was initially just a payment method that could be used within their chain stores. It is linked to debit cards, credit cards, or you can store value in PX Pay. It has now also established an electronic payment institution, so it can handle electronic payments for all merchants or institutions with electronic payment transactions nationwide. All right, so now we have these. The three main services of electronic payment institutions currently are collection and payment agency, transfers between electronic payment institutions, and allowing you to store value. So the three core businesses of electronic payment institutions are collection, payment, transfer, and storing value. Who will use electronic payment services? There are three roles. One is the consumer. The electronic payment institution operates a platform. Previously, we talked about the platform business model. A platform matches bilateral or multilateral users to exchange goods and services and conduct monetary transactions. Consumers and merchants, and another very important aspect is that because this electronic payment platform can store value linked to credit cards or financial accounts, it involves the corresponding banks. So there are these three roles. We will come back to see what actions and responses occur on this platform, which results in which electronic payment institution performs better.